You're about to hear from Master Trainer Vince Vora. Now, he's with Trading Winds. Now, Vince is a senior trader at TradingWinds.com. Now, over the last 3 decades, he's been trading and refining his trading systems that are based on technical analysis and price action. Now, over the last few years, his focus has been on teaching people how to become better traders. Now, his systems range from simple to sophisticated and can be used in any market conditions to trade Forex, stocks, options, and futures. So with that, I bring you Vince Vora.
Excellent. Thank you so much, and welcome, everybody. I'm really happy to be here with you today. Today, I am going to be sharing my favorite trade setup with you. It's a great setup, very simple, very easy to use, and very effective. I'm really looking forward to sharing this with you. Now, a bit about us before we start here. At Trading Winds, we're a group of pro traders with well over 30 years of experience. We're actually real traders and real teachers. And we've been designing our own trading systems and strategies for many, many years and training people around the globe from beginners to experts. Now today, I'm going to spend the bulk of my time on my charts. I'm only going to go through a few slides, just a handful of slides. I'm going to share with you the money management rules that we use here, all our traders at Trading Winds use here. I'm also going to be showing you what you will need to apply this system, and then go through the actual trade setup with you. I'm going to give you the full setup. Then we'll take some time. I'll bring up my live charts. I'm going to show you several examples, Forex, futures, stocks, options, the whole gamut, and also give you an opportunity to throw out a few symbols at me. We'll bring up the live charts and review those together, okay? And then we'll leave time for some Q&A at the end. Now, I'm just going to put up a couple of poll questions. I just want to see who's in our audience today, so I can tailor my examples to you specifically. Just please let me know which market you do prefer to trade most. Is it stocks, options, futures, or Forex? Thanks. I see those rolling in. Excellent. Quite a few futures, options. Excellent. And one other question before I move on. How active are you? On average, how many trades per month do you place? Is it 1 to 10, 11 to 20? Or are you extremely active? 51 to 100, 100 plus? Please let me know. Several of 100 plus. Excellent. I'll just give you a few more seconds. Thank you, everyone, for responding. That's fantastic. A lot of active traders here with us. You're going to really enjoy this. This setup, it gives you quite a few setups, and I'm going to show you a few ways to be very busy with this system. Now, taking care of the legal stuff first. You know, trading is very difficult. It's a tough game, and you got to really be very careful when you're trading and really arm yourself. And the way you do that is with education and learn before doing, practice extensively before doing. But one very easy and quick way to eliminate risk is by using money management. So let me share the rules that we use here at Trading Winds. Okay, number one, this may seem obvious, but it's a must. Do not trade with money you can't afford to lose, okay? Don't trade with your mortgage money or the money you need to live off. And always trade with an amount that is small enough that it feels completely insignificant to you. Now, for some of you, that'll be a couple $100. For others, it'll be several thousand. The amount does not matter. What matters is that it feels insignificant to you, because the most important part of trading is how you manage a trade once you're in it, not picking the entry, okay? So in order for you to manage that trade appropriately, you need to be calm, level-headed, think rationally, and manage it appropriately. And the only way you do that is when you're not worrying about the amount that you have in the trade, okay? Now, a few more here. Never risk more than 5% of your account balance in any one trade, okay? The reason being is there's going to be so many setups with this. You'll be able to be very picky and very selective with these, and it's a real benefit. You'll see just how well that's going to work in a little while. Also, never have more than 50% of your account balance in any one, never have more than 50% of your account balance active in the market at any one time. Okay, the reason being here, there are so many things that are out of our control when it comes to trading in the markets. You know, there's these devastating events like 9/11 that happen that are completely out of our control. These news announcements that come out of the blue that really rock the markets. And if you have your full account invested, whenever that happens, you take a big hit, and that's what you want to avoid. So it won't take a lot to be able to make money with this. So you can afford to only trade with part of your capital, leave the rest aside, and that way if you ever do take a hit, you'll have the money there to recover very quickly. And along those lines, you should never place more than 2 trades per day. Now, all my examples are going to be with daily charts, so that's what I'm referring to. If you trade on an intraday time frame, you'll obviously be a lot more active. But you can be very selective and be picky and pick the 1 or 2 best trades a day. Again, many times throughout the year, we'll see a day where the Dow was either up or down 300 points, and same with the S&P, up 20, 30 or down 20, 30. So if it's a strong up day, okay, then you're going to get a lot of trade setups to the upside, and vice versa. If it's a strong down day, you're going to get a lot of trade setups to the downside. Now, if you jump in and get into 10 trades in one night, and the very next day the market reverses, again, you're immediately in the hole, and that's what you want to avoid, okay? So be very selective, pick your 1 or 2 best trades. Now, there's a couple other golden rules we have here. It's in every one of my presentations. Some of you who have seen me speak before have all heard this, but it's worth repeating, and I'm going to say it again. I want you to write this down. I want you to walk away with this. Keep it posted in front of your computers whenever you're trading, okay? Don't forget this. You will never go broke taking profits, especially if you're just starting out. Make it a habit. Bank those profits. You'll be very thankful you did. And leave your ego at the door when you're trading. This is not about whether you're right or wrong. That's important. It's about how much money you make when you're right and how much money you lose when you're wrong. Okay, that's really what it comes down to. Now, what will you need to trade this setup? I mean, the short answer is not much. I mean, this strategy can be used with any charting platform, okay? Any charting platform that has a 20-period simple moving average indicator is all you need, and it is available on, I've yet to see a charting platform that doesn't have it, so any platform will be fine, okay? There's no need to spend money on new hardware or complicated charting software, and if you're viewing this webinar, you already have all the equipment you need, okay? Just about to get into the setup, but before I do, just a few benefits. Number 1, it will work on any market, be it stock, options, futures, Forex, and globally, okay, on any exchange, and on any time frame and any price level for the underlying, okay? It really is a simple technical analysis-based setup that works consistently. Now, any trader or investor with any level of experience can use this. You will see how quickly you'll be able to pick this up once I show you what's involved. Just a couple days flipping through charts and you'll be a master at this in no time. It is very easy to spot a setup on the chart, and the more you review charts, the easier it becomes. It'll be like they'll just stand out to you the second you glance at a chart. It's amazing. Also, the real benefit here is it will help you grow your account consistently. It is very effective, and also for all of you option traders out there, I saw there are many of you, you can really leverage this system with simple calls and puts, or even better, if you're more experienced and use advanced option trading strategies, you'll really love this. Now, a bit of background on the strategy itself. When we first were challenged to develop this, we were given a few parameters, and they were that it must be simple to spot on a chart, okay, and it is. You'll see that in a second. Also, one of the mandates we had was that it could be used on any platform, which we've achieved, and also easy enough to be used by anyone, any trader, whether they're just starting out or they're experienced. It had to be extremely low risk, which it is. When you look at our rules, when you see our rules, you'll understand why there's very minimal risk here involved. And also, it has to be consistently profitable. So we've identified a setup that is, and not only that, we've identified ways to improve it and really make it almost what we like to call the best of the best trade setups, but I'll show you in a moment, okay? So all we have with this strategy, there's only two components here that we look at. One is the 20-period simple moving average, and I'm going to tell you now you don't even need it. Once you really get used to this, okay, you'll understand why that is just a visual aid at the beginning. You won't even need it, but I'll show you how effective it can be at the beginning. And also, an engulfing candlestick pattern. If any of you are not aware of it, I will show you that in a second here. Okay, so for any of you just starting out, the simple moving average is just calculated by adding the closing price of a security for a number of time periods and then dividing this total by the number of time periods. Just a straight average, okay? Very simple. Again, we use the 20-period simple moving average. Now, the engulfing pattern is a reversal pattern. A Japanese candlestick reversal pattern that can be bearish or bullish, okay, depending on whether it appears at the end of a downtrend for bullish or at the end of an uptrend for bearish engulfing pattern. So here it'll be a lot clearer on the chart, but just for a quick example here, you can see on the left the bullish engulfing example. So you have the market trending lower, and then in here in the circles is you get a bar in the opposite direction where the body of the bar fully engulfs the body of the previous bar. In other words, the wicks, when it comes to engulfing patterns, do not matter. The wicks on the candles do not matter. It's strictly the bodies. Okay, so the body here engulfs the previous, which indicates a change in direction. Okay, and a new start of a bullish trend. And the opposite is true for bearish engulfing. So you have this upward momentum, and you get the bullish engulfing candle here. The body of the candle on the right fully engulfs the body of the candle on the left, and that indicates a change in trend. Okay, so give me just a few moments to bring up my live charts, and I will be right back with you with several examples, okay? Okay, hopefully everyone can see my screen now. Just give me another quick moment here to get set up here. Okay, let me spin. Everyone can see my screen well? Great, okay. So here we have Southwest Airlines. Now, there's a couple things I want to show you first before I show you the actual setup here. So when it comes to this setup, really, it's momentum based. So what we're looking for is momentum. And the way we can tell momentum, and the reason why I said earlier that you don't really need the 20-period simple moving average once you learn how to read this, because all you're looking at is the price bars, the price action, and you're looking at the slope of it. So in other words, let me draw what I'm referring to here. So we could have an upward slope, a slight upward slope such as this, or an even better upward slope like this, sort of a medium slope. And then we can even have a more significant slope, such as this. So this is what I mean by momentum. The slope on the price bars is really what you're looking for. And the 20-period simple moving average gives you a quick snapshot of the momentum or the slope of how strong that move is to the upside or the downside. So for downside, it's similar. There's a slight slope, a more significant slope, and then a much more significant slope. And the more significant the slope, the more momentum you have in that move, okay? So that's what you're looking for. The stronger the momentum, or the stronger the slope, the stronger the setup will be, okay? So let me just clear these lines off my chart and show you what I'm referring to here. Let me zoom in. Okay, so right in here, if you can see it, right in here, we have an engulfing pattern. And let me actually zoom it in a little more for you, just so you can see a bit better. Hopefully that helps. So remember, the wicks do not matter here. It's just the bodies. And in this case, the body of the green candle here completely engulfs the body of the red candle. Now, some of you may ask, does it matter by how much it engulfs? Well, the more it engulfs, the stronger it is, okay? But as long as the high and low of that body is totally engulfing the high and low of this body, then it's a valid engulfing pattern. Now, if I zoom out just to give you an idea, look at the slope that we have here. Okay, let me draw this in for you. Right here, if you can see the slope here, okay, it's pretty significant. You have nice upward trend and a pullback to the 20, and you get that nice engulfing pattern right along the 20. And from there, what happens, you get a beautiful move higher, okay? And typically with this, there's no pullback afterwards. It's usually moving in your direction right away because the pullback here has already happened with the backdrop of this bullish pattern here, this strong upward momentum, okay? So that's really what you're looking for. Now, once you do find that pattern, there's a difference between the setup and the actual trigger. So this doesn't mean you just jump in automatically. The way you get into this trade, the best way to do this is to wait for a trade above the high of the engulfing candle. So in other words, the green candle here is what we would call the engulfing pattern. You would need a trade above the high. Now, when we say the high, we do mean the actual high. So if there was a wick here higher, you have to wait for a trade above that wick, okay, right above the high of the day for that bar. If you get that trade, then you're in the trade, and the stop loss goes just below the bottom or the low of that bar. So all you're ever risking is that one bar. That's how we keep our risk very, very small here with this setup. Now, if it breaks the low before it breaks the high on a bullish engulfing candle, then that setup is negated. You walk away from it, you have no valid trade, you move on to look for something else, okay? So it must break above the high before it breaks above the low, okay? And then there's several exit strategies you can use, but I'll talk a bit more about that a little later. Now, let's go through a few more examples here. Here is another beautiful one here on Apple. Now, you can see here with Apple, zoomed in, you don't really see it very well, but there you see the 20 sloping higher here. Okay, it had just consolidated sideways and then started to move. So I'm going to show you a few examples of when you have, for clarity purposes. In other words, this one here, you could say, well, it's sideways. It's moving sideways. The 20 just turned upward. So does that really indicate strong momentum? Well, it does, but I'll show you some even clearer examples. Now, if you look at this example here, let me get my rectangle there. Right here is the engulfing pattern, if you can spot it, right there. See that? You see the big green body fully engulfing the little red? right here, right after this consolidation, right along the 20. What happens next? It powers forward, okay, straight up. And that's exactly what you're looking for. Again, you wait for a break of the high for your entry. Stop goes just below the low, so you're only ever risking the length of that one bar, okay? Let me go through a few more here. Now, here is Disney. Now, Disney, you can see from down here, you had more of a significant slope higher already in play here. And if we zoom in, there was one right here. See that? Just get my drawing tool again. Okay, right here. So a beautiful engulfing pattern right along that upsloping. Okay, and there you go. And then if we zoom back out, you can see what happened to the stock after that. Real nice run up. Okay, let me go through a few short examples to make sure we have plenty of time for questions. Okay, so my team is telling me, sorry, that there's a lot of questions from Miguel, Ken, etc. I have a lot of ground to cover, so I'll try to go as quickly as possible and get to some of your questions. Okay, let me just give you a couple of quick examples to the downside, just so you understand the criteria for a short trade, and then we'll take some questions. Okay, so along here, you can see the beautiful slope down here, right there. You can see that significant slope. So remember, a slope can be like this, right? It can be a little more significant, but the sharper it is downward, just like it is for the bullish trades, the more significant the slope, the better. That's really what you're looking for, okay? And so right here, there is an engulfer. There were actually a few along here. There's one I will point out to you right here. Okay, there it is, right there. Let me zoom in for you. You can see it a little better. So you have that significant slope. Okay, it's dropping. It pulls right back into the 20, and you get a nice strong red bar here, fully engulfing the body of the green. All right, and the result, if I span out, is a solid move lower. Okay, now the same rules apply for entry. Here you'd be looking for a trade below the low of the engulfing candle, okay, before you enter, and as soon as you do enter, you put your stop just above the high of that bar, so you never risk any more than that. Okay, and of course, if it moved above first, then that trade would be negated, and you would walk away and look for other trades. Now, for you Forex traders out there, I saw plenty of you Forex traders out there. Let me have a look here. Here's another beautiful example. This is the British Pound Aussie, and you can look right here after this beautiful 3-bar pullback to the 20. Right there is a nice engulfing pattern just near the start of that run. And you can see how most of the time, because it's already, it had just pulled back there, it tends to jump and move in your direction right away, which really helps with remaining calm and thinking rationally and managing the trade appropriately. So really at this point, all you're looking for is an area to tell you when to move your stop up, take part of your profits and scale out, or continue riding this higher. It's a very easy trade setup to not only spot, but to manage once you're in it, okay? For you futures traders out there, let's have a quick look here. Let's see if, oh, I think we've got one right here actually. Let's see if there was one. Oh, maybe I missed it on there. Okay, so I'm told there's a lot of questions here. Let me highlight here. Let me get to them in a second. Yeah, so there's a nice one right here. You see that? Nice engulfing right along the 20 with a nice slope lower. Put your buy stop right there, our sell stop right just below the low. Once you're in, your stop goes above, and you ride that lower, okay? All right, great. So I know a lot of you have questions. Let's start answering questions here. And actually, if you have a few symbols you want to throw out to me, and we'll pull up a couple of live charts, then we'll try to find a few setups together for you. So if you have your favorite security that you love to trade, you want to see if this works on it, throw it out for me. I'll bring it up, and we'll see. Okay. Henry's asking for the Aussie US. So let's have a look. Aussie US. Aussie US. Let's see. Let me zoom in so I can make sure everyone can see it well. Yeah, there's one right there. Look at that. So you see here, look at the significance of this slope here. Okay? Let me just draw this in for you. Look at the significance of this slope. All right? That's really what you love to see, because those really work very, very well. And if I zoom in here, just get my rectangle. There it was right there, right along the 20. You can see it started, this start here was the start of this drop. Now, because the moving average is just starting to turn at that point, and when I zoom, it loses its significance of the slope downward. But you can see, you can actually draw your line in to help you understand how significant the drop is using the price bars. If you draw it along the price bars, you can see that it's almost a 180 down. So that's the kind of momentum you're looking for. Then you get a period where it takes a breather and pulls back into the 20, and then you get your setup. Again, you're looking for a break of the low. You're in on this bar. Stop goes above here, and immediately 5 straight days downwards here, and you actually could have ridden this one down with the exit strategies we use just about to this area here. So a very, very nice trade. I'm going to bring in my producer Raul to help me go through the questions here because they're going by so quickly. He can read while I'm navigating through the charts, and we can answer a few more questions for him.
Vince, thank you. Thank you for letting me join you, even though you wake me up at 6 o'clock Pacific time every Saturday. My family absolutely hates you, but I'm happy to be here.
Great.
Jason wanted to know about SPY.
Oh, sure. SPYs, yeah, absolutely. And these tend to give great signals as well for us. Let me just expand my chart here a little just so I can try to spot them a bit easier. Now, right here, let's see if we can pull one out here. Okay, well, there was one here. Let me see if I have the right tool. There we go. There was an engulfing pattern there. Let me zoom in. You can see, first of all, before I zoom in, the slope, okay? That's the momentum, and I've already zoomed in a little. So you can see the slope there. You already have that on your side. Then you get that pullback. Now, here's the engulfing bar, okay? Here's the engulfing bar. Unfortunately, with this one, remember the rules for entry. You're looking for a trade above the high of it before a trade below the low. So in this case, on this very next bar here, okay, it breached the low of this candle here. So this action, once it breached the low here, would have negated this trade by our rules. Now, some of them do tend to still work out because the signal itself, that pattern, the engulfing pattern, is very reliable. So many do work out. But again, we're very conservative here. And the reason why we put those strict money management rules in place and our strict stop loss rules in place is to minimize risk, because over time, with many, many trades that you take on this, and most being winners, if you manage your risk or your loss on your losers, you're only risking that one bar, you're going to do very well. So that's why. So it's okay to miss a trade like this every once in a while based on that breach of the low than it is to risk it and have more losers throughout the year. So there was one there, but unfortunately, it would have been negated. Okay.
Thank you for that, Jason. We're a half hour in.
Yep.
Gary wants to know what's the exit strategy for these trades.
Actually, there are several. Actually, if you don't mind, can we do one thing?
Yeah.
Why don't we look at one or two more charts?
Okay.
And then I'll get back to my presentation and finish up, and I'll talk about exits then.
Beautiful.
Okay?
Yvonne wanted to know about NUS, New Skin.
Sure. Let's have a look at NUS. All right. So let me just zoom in here. It's a little difficult to see. Okay. So actually, I think there were a couple, but let me zoom in a little more here for your benefit. Right here. Rectangle. Right here. You can see right in this area, there's an engulfing pattern right along that 20. And if I zoom back out just to show you the slope, okay, you can see the slope was already in place, okay? You get that pullback, and right along the 20, you have a nice engulfing, and look what happens right afterwards, right? So, I mean, are you going to sweat a trade like this? You're never going to sweat a trade like that. It never goes against you, and that's the real beauty of it. There's several examples of this throughout. You'll find this on most charts, and if you just spend some time with this flipping through charts, it's like they stand out to you in 3D when you look at a chart. It'll be very easy to spot for you, okay?
Thank you, Yvonne. Last one we'll do, Paul wants to know about Amazon.
Amazon, great. Let's have a look at Amazon. Okay, so actually it looks like there's one right here in Amazon. Yeah, right there. So let me draw that out for you. Right there it is. So again, you have this significant slope higher. Really, this is momentum based. That's what you're looking for, right? You're looking for the momentum. There it is, right? And now you got this gap right after earnings, okay, which is what caused this momentum. That was the driver behind it. But then it pulled back, and you can see that throughout you had a beautiful upsloping 20. You get that nice engulfing pattern right there. It breaches the high first, which means you're in. Stop goes just below the low, and you never look back. It's just a beautiful, beautiful uptrend. Okay? Great.
Thank you for that. We've got literally hundreds of questions.
Okay.
Do you want to finish your...
Yeah, let me just say a couple things. First of all, I'm happy to share this with you. This is why this has been one of my favorite setups and has been my favorite for this year, because it really does work so well. But there's so much involved, and we have so little time here. I wish I could share the rest with you. There are actually ways, believe it or not, to make this setup even more accurate, and actually significantly more accurate. Now, for those of you that are serious about making money with this, okay, we have a pro class coming up on Saturday, September the 13th, 1 p.m. Eastern Standard Time. Now, if you're overseas or that date and time doesn't work well for you, the event will be recorded, and you'll be receiving the recording. And actually, I've got a little tip for you. I'm gonna give you a way to get this without waiting until the 13th. But anyway, I myself am going to be teaching this class. It's a 2-hour class. It tends to run a little longer as well. And the way we increase the accuracy on this is I'm going to be adding support and resistance. I'm going to be showing you a trick that the pros use for support and resistance. I've been very fortunate over well over 20 years that I've been trading to trade shoulder to shoulder with some of the best traders in the world. That's how I got started, and that's what's taking me to where I am today. And they do things a little different that they usually don't like to give away, but I'm going to show you a way to use support and resistance to increase the accuracy with this setup and any other you use by well over 30%. Now, I'm also going to introduce the Fibonacci retracement tool, and I don't even have it on the slide here, but I'm going to throw in the Fibonacci extension tool as well that you can add to this to find the best of the best setups of these, because there's going to be many. When you sit down to review your charts every night, there's going to be several of these setups. You're going to really want to be able to differentiate, the one or two best ones for you to take that evening. Now, not only that, I'm also going to give you 4 additional trade setups that you can use with stocks, options, futures, and Forex that work just as well. They're pretty amazing. And the the second half of that class, from 2 p.m. on, we're going to be actually doing a scan together. I'm going to bring up my live charts. I'm going to share my watch list with you. I'm going to show you how I and the other traders here at Trading Winds search for trades every evening, and we're going to do a search together. We're going to scan for trades that we can all walk away with and put on the very next day, okay? All you need to do is go to tradingwinds.com/pattern. Now, this is what you're going to get with this. You're going to get an instant download of the previous pro class. We actually had one yesterday, okay? So when you register, we're going to actually send you a recording. Can we do it tonight? Can we send the recording tonight or tomorrow? Okay, tonight or tomorrow you will get the recording of yesterday's class. It's a 2-hour class, $297 value. But even if you get that, we're still going to reserve a seat for you at the live class on the 13th of September. Okay, and we're also going to throw in a 30-day membership to our pro service. Now, our pro service, our members receive videos from us Sundays through Thursdays where we recap what happened in the markets that day. We talk about where we think the markets are going. We review all our open positions. We highlight several new trade setups that we find, be it Forex, options, stocks, doesn't matter, futures, and we follow those through. But also here, the real bonus of that is we have several systems that our traders use here at Trading Winds. So the trades that we highlight in those videos are not just specific to this setup, because we know we've given you what you can to search for those yourself. So we're also going to throw in the trades from the other systems that our traders find. Okay, so together, all of that is a $691 value, but for anyone on here today, all we're asking is $97. Okay, again, it's tradingwinds.com/pattern, and unfortunately we do have to limit it. There's limited seating because we tend to get a variety of people. In other words, there's complete beginners that join our classes, and there's expert traders as well. So in order for us to make it worthwhile for everyone and answer all their questions, we cannot have a huge class. It would just go on for far too long. So there's a lot of material I'm going to be covering, and we want to make sure we answer all your questions so you walk away that day with a system that you're ready to use. And remember, you're going to be walking away with some fresh trade ideas as well. So the first 25 people will be able to get in. Now, Ro, if we still have time for a few of those questions.
We do. I just wanted to let you know, a couple of people have gone to tradingwinds.com/pattern with an S at the end. There's no S at the end. It's just the word pattern, P-A-T-T-E-R-N. If you have any difficulty ordering, the team is here. We're on live chat, and if you want to get us by phone, you certainly can do that as well. 1-888-574-2426. We will put that in the chat window as well. Vince, a couple of questions?
Mm-hmm.
Okay.
Absolutely.
Let me just go back up here. William wants to know, can this strategy be used on smaller time frames, like 15 minutes?
Yes, absolutely. Again, it works on any market and any time frame. So an intraday time frame, the 15-minute works great. So does the hourly and the 4-hour. So those are your three, we'll call them sweet spots when it comes to intraday trading. 15-minute, hourly, 4-hour work fantastic. The daily, the weekly, they all work just as well.
Thank you for that, William. Miguel wants to know, if we cannot attend, will we receive a recording?
Yes. So again, just to clarify, number one, when you register, you'll be receiving a recording of yesterday's class, either tonight or tomorrow. And then another great feature of that is you're able to watch it, and if you have any questions, make a note of those so you come to the live class with those questions, and we'll make sure we get those answered for you. And also, even though you've already received that recording, we're still going to send you a recording of the live class on the 13th because, again, we're doing that scan together. There's going to be some real trades that we find for you to walk away with, so we don't want you missing those. So that'll be sent out as soon as the class is over on the 13th. And that's a Saturday. Again, you'll have the Saturday and Sunday to review that recording before you place those trades on Monday.
Thank you for that, Miguel. Janice wants to know what kind of portfolio size do I need to trade this system?
Actually, you don't need a lot at all because it's very simple and the risk you're taking is only that one bar. You don't need a huge account at all. And especially for all you option traders out there, you know, 1 or 2 contracts alone will more than make up not only the cost of the course, but our membership for several months. It's amazing. You know, all those examples I showed you, when you see how quickly it moves in your direction, it's very important when it comes to options to have a system like that, because as you all know, with the theta decay on options, when you get that pullback, immediately you're in the hole, and it's much more difficult for it to make up that lost premium. You need a much bigger move to make up that loss to begin with. So when you have a system that immediately moves in your favor, it really makes a big difference with options. So again, any account size will be fine. Just remember, trade with an amount that feels insignificant to you and follow the rules. You can't go wrong.
Thank you, Janice. I just want to give you a little bit of a 15-second personal story. I actually attended this class. I thought I knew about candlesticks. I didn't know anything.
Exactly.
Until I attended the class. Yep. I took away a trade on BlackBerry. I bought the call options for $1.20, and the next week I ended up selling them, I think, for $2.60 or so. I can't remember the exact number. Yep. I had 2 contracts, made, you know, $240, $280. I can't remember the exact number, but well worth it. I mean, the class was $97. I made that money back within a week.
Yeah, and I mean, with options, you know, it's much easier to get some very high percentage winners. It's not uncommon to get 200–300% winners with options. But even if you're trading the stocks, remember, it may seem like you're putting in a lot more money into that play if you're buying, say, 100 shares of a $90 stock. But all you're risking is that one bar. So there's, you know, on most stocks, that one bar is less than $1 range. So the risk is so small compared to that potential return, because we've seen over and over again the kind of moves that we can get from this. And the other nice thing is you can put on more trades at a time when you know that your risk on any one trade is very minimal. So you're taking advantage of more opportunities that way. So that's another real benefit.
I have to apologize. Mike, John, William, I see all of your questions marked. James, I'm sorry we can't get to them. You can email us at info@tradingwinds.com. We're happy to talk to you on chat, on the phone, whatever you'd like. I'm going to ask you one last question. Carlos wants to know, is the seating really limited to 25?
It is. I'm sorry. I know, and especially in a multi-speaker event, a lot of you want to wait to see the other speakers and see what they have to offer, etc. Unfortunately, we have to, because there really is. I mean, if you look at the content we revealed today, and we're already in 45 minutes, and if you look at everything else I'm going to be covering, that alone, without the questions in the scan, is a huge amount to take on. But the number of questions that come in, the last thing we want is to let you go from that class where you're unsure of what to do next. I mean, we want to give you a system that you're ready to trade that very next Monday. So in order to do that, we need to answer all your questions, so we have to keep it small. Sorry.
And last question before we hand it over back to Michael. With the 30-day pro subscription, what happens at the end of the month?
It will automatically renew for you at the rate of $97. If for whatever reason you're not happy with it, all you have to do is contact us and cancel, and we'll take care of that. Not a problem.
Wonderful. Michael, all right, and the rest of the Investor Inspiration crowd, we really appreciate being here. Thank you so much for letting us be a part of the process. We want to keep you on time, so we're going to sign off and let you take it over from here. Vince, last word.
No, thank you again to Michael and everyone else. It was a pleasure, and I really hope to see a few of you there on the 13th. Thanks again to everyone.